What's going on, everyone? We hope you had a great weekend, as it's now about that time to get right back into the stock market. On Friday, 67% of stocks in the S&P 500 closed up in the green, and as I'm sure most of you already know, Chinese stocks had one hell of a week where it was actually their biggest week in decades. So of course we're going to talk a lot about these types of stocks and what to watch with them heading into this week. But on top of that, we have the big man, Jerome Powell, set to speak tomorrow, and we are right about to head into the month of October, which is more important than you think. So we have a lot to talk about today. There's a lot of great setups brewing in the market, and we have a pretty interesting big money trade towards the end of today's video as well. But besides that, Tom, let's not waste any time and let's get right into it.
Yeah, and I guess kind of doing a quick recap here on the market from last week, we saw SPY make brand new all-time highs, but I will say it was a pretty choppy week overall, as you can see by the price action I'm circling. There was a nice breakout here on Thursday morning, but Mike, it was all in pre-market, right? And I think that that's been a big thing lately. We've been seeing a lot of gap ups and gap downs on the SPY chart, so I'm definitely a little worried for this week, especially with how SPY closed right around that 570 support once again. But I know that SPY wasn't the most popular thing last week, right? There was definitely a sector out there that was way more popular, like the China stocks. And Mike, I actually just went to BABA's close from the previous Friday up to the high of last week. It had moved up like 23% at the high of last week. So that is one hell of a move by BABA. And then there's other China stocks that did even better than that. I know NIO had a great Friday, up 12% on Friday as well. But I mean, Mike, the China stocks just aren't slowing down here in the short term.
Tom, there is so much buying pressure with Chinese stocks that it is quite literally overwhelming the Chinese stock exchanges. Like, I'm not even kidding here. You could see that the demand was so strong that it actually caused some glitches and some problems with processing all of this buying flow, you can say. But diving into this a little bit more specifically, when we look at Chinese stocks in general, some of their major stock indexes, which are comparable to our version of the S&P 500 and Dow and NASDAQ, actually had their best weeks in decades. Their CSI 300 index had their best week since 2008, and the Hang Seng index had its best week since 1998. Basically, if you aren't caught up on the news, the Chinese government is turning on the money printers. They're unleashing a lot of economic stimulus, kind of similar to what the U.S. government did in 2020, but basically they're trying to stimulate their economy, and they are really trying to get things flowing by incentivizing more economic consumption and, of course, just injecting liquidity into the economy. Long story short, this is making for a ton of buying pressure with Chinese stocks. When you look at ticker symbols like KWEB or FXI, they are great representations of the China stocks as a whole, because it's a whole bunch of them combined into 1 to 2 tickers. Like Tom mentioned, you have individual Chinese stocks like BABA, which is BABA, JD, PDD, and others that have that true crazy explosiveness to them. But what's worth keeping in mind is that as we look at Chinese stocks right now, they are running to the upside with more momentum than quite literally anything else. And when we look at, where these stocks are in the grand scheme of things, you could look at them on a weekly basis and say, wow, these stocks are really overbought. And honestly, they are. They ran up so much so quickly where, if you're just looking to get in now, you might be a little bit late. But when you could say zoom out and look at the broader picture at hand, you can see that these stocks are still at historically low levels. Basically, Chinese stocks, everyone just kicked them to the curb and forgot about them over the past couple of years for multiple reasons, where they are just trading at valuations that are so low, and basically no one cared about Chinese stocks until this past week, and now apparently everyone cares about them all at once. So it's an interesting dynamic here, and they're going crazy.
Yeah, they really are. And I'm not somebody that even generally loves the China stocks just because of the risk with them, but you have to understand where the money's flowing, and for the short term and for some nice swing trades and stuff, there can be some amazing opportunities still here in the short term with China stocks. I am glad though, Mike, that, you said that they are a little bit overextended. I think that they are. Whenever we go out to the daily chart of like FXI, for example, we're starting to near some pretty big resistances. Like FXI, right around that $33 mark, that is a major resistance coming up. We go to BABA, it's getting really close to like the 115 to 120 resistance. Even like Queb, you look at all these China stocks, they're getting pretty close to some big resistances coming up. So just watch out for some of these overhead resistances on these in the short term. But I mean, right now, Mike, the printers are on, and whenever you go to a daily chart, this is some of the best volume that we've seen on these stocks within a 4-day period in a long time. Like, just the sheer volume alone is kind of like the volume that was coming in whenever these stocks were making these lows a couple years ago.
Exactly. And like when you look at these stocks right now, there's a couple main ways to play them. Of course, if you're like into super short-term trading, then of course there's like intraday scalp opportunities in both directions. But I think realistically, most people aren't into that short of trading. Looking at like a shorter term picture, ideally it would be great to see a pullback with these stocks, maybe somewhere in like the 5 to 7% range. I was specifically looking at FXI, but it's somewhat similar compared to other Chinese stocks and ETFs in general. But if we see like a decent sized pullback, I think that is what would make for a better entry opportunity rather than just like buying in at a relatively late point in this short-term uptrend. So I think it's smart to wait for a pullback. And of course, there is that third way to play this shift in flows, which is just buying them and holding them for the long term. But that would require you to be okay with owning Chinese stocks for the long term. That's not a bad thing, but it's not something that everyone is a fan of. So regardless, there's a lot of ways to take advantage of this situation, but the main thing you want to do is not to just blindly buy into these stocks because they're popular now. That is a good way to get ran over.
Yeah, exactly. And we see that happen quite a bit with these sectors that start popping off in the short term. Everybody wants to be a buyer after it already ran up 50%. That's how it always is. That's trading psychology. We see it with GameStop and AMC. We see it with even Nvidia. We see it with all these crazy stocks where everybody wants to get in after the fact. And, I still think that there's room to go with the China stocks, Mike, but it definitely is something to just be a little bit aware of, that there might be a pullback here in the short term. And it's just something to keep on the radar with how much they've went up. Because whenever you see how much some of these stocks have went up over the past month, like let's just go back to the beginning of September for Baba's sake here. I mean, we're talking 33%, right? And there's other Chinese stocks that do even better than that. But Mike, I know that China stocks are popping off right now. I'm personally a little bit worried about this month that we're heading into. Monday will be the final trading day for September 30th. And I will say October during election years is one of the worst months during election years, just to say it politely.
Yes, October is definitely not a good month for elections, and there's real reasons to this. As we could see by looking at some historical data here, we could see that dark blue line that's pointing to the downside for the month of October, which shows that on average for about the past 75 years, October has actually been red for, election years, which is not all that surprising because people naturally, get a little bit scared ahead of crucial elections and sell out to protect themselves from a potential, potential market craziness. So keep in mind that we are heading into a time of the year that is relatively weak for the S&P 500 as a whole, but just like what was demonstrated in the second half of September this year, which is also pretty bearish, just because the average is red, that does not mean the stock market has to fall down with 100% certainty. So just understand that most of the time we see selling pressure coming to the market here. Be a little bit more skeptical and, just use this data to, I guess you could say, factor into the overall trading decision-making process. But another thing that I thought was very interesting is we have this other chart that shows when you specifically have the stock market up 20% or more for the year, And then you're heading into October and then just the rest of the year. October ends up being red most of the time. Out of the past 9 instances where the stock market was up 20% for the year heading into October, October closed lower 7 out of the 9 times. So keep that in mind. And then you also combine this with an election year, and it gets even a little bit more interesting.
Yeah, it really does, Mike. I couldn't believe that I read this. And, the S&P 500 is like right at that 20% mark right now, 20.3%. There's still 1 day left in September, so maybe we'll go into October and it's a little bit less or something. But nonetheless, it's very, very close to that 20% mark. And I couldn't believe that October was red this often whenever the market was, this green. Now, of course, this is just historical data, like Mike said. With September, things don't always end up playing out to the historical averages, but it is interesting, especially with the election year coming up. It's just something to keep in the back of your minds. I'm sure we're going to get a lot of comments from the Bulls, though, saying, hey, September ended up being great, right? And it's just an important chip to keep on your shoulder whenever you think about these.
Yep, you know it. But Tom, we also can't forget about the big man speaking tomorrow, Jerome Powell. What do we have to know for this event?
Yeah, pretty big here. So 1:55 p.m., there will be a Powell speech tomorrow. Now, it's not exactly what you're thinking. It is an economic outlook at the National Association for Business Economics, NABE, as they call it there. It's an annual meeting in Nashville, Tennessee, and I thought it was actually going to be pretty big because he's actually going to be talking about the economy, right? He's set to give an economic outlook, and I know last week he had a speech where it was just opening remarks via a pre-recorded video. I think that this tomorrow is actually going to have a lot more weighting on the market. And, we haven't really heard much from Powell besides, obviously the talk from the last rate cut, right? So hopefully he sheds some light here on the economy for us.
Yeah, because Jerome Powell is doing some things that are pretty interesting and bold, because he gave the jumbo rate cut the other week for the 50 basis point rate cut, and that basically makes his biggest concern tied to inflation. The last thing he wants to see is for inflation to really ramp up again, and considering there's a lot of bullishness that is flowing into the market right now, he might want to tame down some of that sentiment to just normalize it a little bit so people don't get all too euphoric and crazy. But whenever Powell speaks, you have to listen. He is the most influential and powerful person in the stock market. So keep this event on the radar for tomorrow. And then, Tom, the earnings lineup isn't all that crazy this week, but what do we have?
Yeah, we do have a couple fairly big stocks reporting. Monday morning before open, Carnival Cruise Lines will report. They can have some pretty crazy movement and even affect the other cruise lines and possibly airlines as well. On Tuesday, we are going to see McCormick, a pretty interesting dividend stock, and then Nike in after hours. I know Nike has been taking a lot of flack as they've, the chart's been getting kind of crazy. And then STZ will report on Thursday, but it is kind of a dead earnings week here. The big one, I think, is Nike. I think that's going to be what everybody's watching. And if we go look at a chart of Nike, they've been recovering up very well in the short term, but we go to a daily chart and I don't know, Mike, they're just now filling that gap.
And then another thing too, Nike is an interesting chart, but I think CCL is a little bit underrated as well, because this stock is coming, or it's actually right at some major resistance levels, right around that $19 to $19.50 range. It's like quadruple topping right here. So basically, if the stock can gain enough momentum to break through this can be fantastic. But at the same time, if it doesn't, it could be a pretty strong rejection.
Yeah, it definitely could. I really do like this resistance, though, and I think it's a little bit underrated as well. And this is actually going to be the 4th test now of that resistance. So hopefully this is where we finally see a good break with CCL. And, going back to the economic calendar for the week, there are some JOLTS job openings, ISM manufacturing PMI on Tuesday as well. And then on Thursday, we do get some initial jobless claims and some ISM services PMI on Thursday, and then non-farm payrolls and unemployment rate Friday. So as the week goes, there's going to be a lot more economic data that we will be talking about as well.
Awesome. All right, Tom. Well, looking more at the S&P 500 for this week, what are the main levels and key analysis heading into the week?
Mike, I was laughing at my SPY chart today before we started. It was so clean a couple weeks ago, but as we've been chopping around, there's been so many support levels starting to form here in the short term. The most largest one to me is 570. I'm going to be watching that very, very closely Monday morning. That was the bottom on Thursday and very close to the low of day from Friday. So if the SPY cannot hold around that 570 mark, I will be watching for key supports to hit right around 569, 568, and then 566.80 underneath there. As far as resistance goes, there's some pretty big ones here. 573 was huge over the past couple weeks. That's going to be on watch, along with 574, and then the all-time high at 575. I'm sure a lot of people are going to be looking for a nice all-time high break this week on the SPY.
Absolutely. So great stuff there. And besides that, let's jump right into some setups and predictions. A stock I'm watching very closely right now is UVXY. So for those of you who don't know, this is technically an ETF that is, I guess you'd say, connected to volatility. Long story short, when there's panic or more craziness expected in the market, this thing shoots up in a pretty big way, as we can see by looking at the recent price action from July and August with this one, where it basically went from $21 a share all the way up to over 65 in like just a couple weeks. So it's a crazy one for sure. But basically, when there is volatility coming into the market, and especially bearish volatility, this moves up in a big way. Basically, I'm looking at this to the upside for this week because what we are seeing in the market right now is an interesting dynamic where the S&P 500 itself, while it is doing good, it is struggling a little bit. It's chopping around quite a bit. And then like some of the highest flying stocks of the year, like Nvidia or LLY or even Kava, which is CAVA, are starting to sell off a little bit. None of this selling pressure is in a major way just yet, but I'm definitely observing how the flows are changing, where we are seeing, some of the strongest stocks in the market start to lead the way to the downside. And I think that ultimately shows that, investors are rightfully so locking in some profits, especially ahead of the upcoming election. So with that being said, I'm looking at UVXY in a bullish way, not just specifically for tomorrow, but even like the rest of the week, because if we do see continued profit taking, it could not only add more volatility to the market, but it could also cause more bearishness in the market as a whole. So UVXY is definitely on my bullish radar.
Yeah, I love the way it moved Friday, up 7% with UVXY. We go back to the VIX, Mike. It's been a crazy year for the VIX, especially in August, how it shot up so quickly and then had that historic move back to, I guess we would say, more normaler levels. But it's starting to bounce off support pretty well. I'm definitely going to be watching the VIX and UVXY extremely closely this week. I love that setup. And with my first play, I'm looking at AMD. There's actually a big double top on AMD in the short term, right around 169 to 170, and I'm watching for a bit of a pullback here. AMD has actually been doing pretty well in the short term. As you can see, it's been climbing up over the past few weeks, but I am watching for this rejection. If we go to the Bookmap, this 169 to 170 area is major on AMD. There's like 100,000 shares about on Friday stacked up at that 170 mark around the end of day, and I'm really just going to keep watching it for more downside moves off of that level. I don't necessarily think that AMD will come back up to test 170 again, but I am just showing you kind of the seriousness, I guess, of that double top up there. It's a pretty major level, and there's a lot of sellers stacked up. So for this week, I really want to see a good move, like back under 163.50 and back below this 164 support that AMD held at last week.
Yeah, that 170 level is a monster, seriously, and I think it says a lot how the stock rejected off that point twice. So I'll definitely keep AMD on watch as well, but another stock I'm watching pretty closely is Zoom to the upside. So I talked about this one in a bullish way a little bit last week, and it is moving to the upside, which is great, but it's not moving, or it hasn't moved yet with the amount of momentum that would be ideal. Basically, Zoom is in an uptrend right now over the past couple of weeks, and it has recently pulled back to like the $66 area. It's in the process of, getting closer to retesting some of its recent highs right around like $72 and 50 cents or so, $72.30. Looking at Zoom to the upside, I really like the way in which it is holding support and putting pressure on recent highs. So it'll definitely be on my bullish radar going forward. Zoom is not one of those stocks that usually has like insane movement day to day, but it can have some pretty good movement, especially over the course of multiple days. And when it does actually gain real momentum, it does move in a very strong way.
Yeah, I love the setup here, Mike, on Zoom. Of course, Zoom, when you zoom out, is very oversold, I would say, in the long term. A lot of people are probably like, oh my gosh, this stock is overbought here, but I don't know. I still think that there's plenty of room to go on some of these stocks that have been recovering up like Zoom. I'll definitely keep it on the radar. With my next play, I'm looking at Tesla in the short term, and Tesla is very, very interesting here to me. It had a really good close on Friday, and even in after hours started popping up a little bit. I'm really going to be watching for that high of day break from Friday, right around that 262.50 mark. So if we're able to see a nice clear extension up above there with Tesla, I'm going to keep watching it to the upside. Of course, if we do see the overall market pull back, we might have to adjust a little bit, right? And honestly, me adjusting, if there's a pullback, I'll probably be playing UVXY.
All righty. Well, good stuff there. And besides that, let's jump right into today's momentum plays. And with the first one, we have Microsoft to the downside.
Yeah, Microsoft had a pretty bad close on Friday. Some of these bigger tech stocks are starting to sell off, and if Microsoft can break under the 426.20 support, then watch them down.
All right, with the next one, we have Hood to the upside.
Yeah, Robinhood's been doing great in the short term. They're right at resistance at $24, so if they're able to break like $24.05, then watch them up.
All right, and then with the last one, we have NVIDIA for both directions.
Yeah, poor NVIDIA had a pretty weird close Friday, but I do like the support that it's sitting on here around 119 to 120. If it breaks under 119, then keep watching NVIDIA to the downside. If it's able to re-break this pretty good 122 resistance, then watch them up.
All right, so we have the upside level for a potential move higher. We have the downside level for a potential move lower. That's for NVIDIA. Don't forget about the upside level with Hood and the downside level with Microsoft. Either way, these three stocks are on watch for potential day trades tomorrow if and only if they break through the levels Tom listed. So keep them on watch. The stronger they move and the more consistent they move, the better the setups become. But besides that, it's now about that time for today's $850,000 big money trade. And we are looking at ticker symbol ELF, ELF. So basically on Friday, the big money put around $850,000 into the 110 strike call options that expire on September 19th of 2025. So these options are a little bit different than most of the recent big money trades for multiple reasons. The first one being that these options are pretty expensive given how much time they have, but also they have a lot of time to them. They have about a year's worth of time. So this is more of like a medium to, I don't want to say long term, but more of a medium term swing trade style of setup. ELF is down significantly from its highs, and it is in the process of trying to hold some of its recent lows. So it looks like the big money is really just like dip buying the setup here. I like how these options are in the money, and I also like how they do have a lot of time to them. But understand that if you are considering following this setup, it will be extremely important to give this setup the time it needs. Some of the recent big money trades, like the FXI one and some of these other Chinese ones, have popped up by hundreds of % in days. Do not expect that with this one. It's more of a medium-term swing trade.
Yeah, I do like ELF though, Mike. That support is pretty awesome down here. With me, I think the big thing is just giving it the time it needs and giving it a little bit of wiggle room. There's some big support around the $100 mark from the past with this stock, along with this 108 to 110 mark that it's been bouncing off of recently. So I don't know. I think it's definitely a play. You have to give some time and you have to give it a little bit of wiggle room in case it touches that $100 or like 99 support down there at the lows. And, keep in mind, guys, like Mike said, you got to give it time because like it could chop around down here at these lows for multiple months before finally making a good recovery, like around the midpoint in next year or etc. So just keep that in mind. It's going to be a play that, you should probably let play out for quite a while. But it's a pretty wild chart though, Mike. I hadn't realized that ELF had pulled back as much as it had here. And I think that's really the good opportunity here. Like, we don't even need to see ELF like necessarily retest all-time highs or anything like that. It's just fallen so drastically. Even just like a short-term pullback back to like 140 would be amazing for this type of options play.
Yeah, so definitely keep it on watch regardless. But besides that, Tom, let's give a giant shout out to today's member of the day, Johnny Appleseed, who crushed it last week with some of these Chinese plays. So huge shout out to you, Johnny, and it's phenomenal to see posts like this one, and keep on rolling. And huge shout out to you. You're brand new to the community, so keep on crushing it. But also, if you guys are into short-term trading, definitely make sure to check out the first link in the description and the comments down below to get in on the stocked up trading floor. A lot of these recent big money trades, especially the Chinese ones, have been going crazy. So that's awesome, but you also get access to all of our bots. You can chat with Tom and myself all day long, join our weekly live event, access to big money trades and the same day the trade is made, so better entry prices than these videos, all the other bots and bonus features that are involved in the community that, if we described, would turn this video into an hour-long video, plus all future upgrades and updates to the trading floor are included, which is going to be extremely beneficial, as many will see very shortly. Basically, if you're into short-term trading, it is the place to be. It'll be that first link in the description and the comments down below. But besides that, Tom, I'm pretty excited for the week, and I think there's going to be a lot of big and crazy moves in both directions.
Yeah, there definitely is, Mike. And don't forget about Powell speaking tomorrow, guys, at 1:55 p.m. Eastern Time. That's pretty much the big event for tomorrow, along with those Carnival Cruise Lines earnings in the morning. If we start to see a good break on the daily chart with CCL, there could be some good action with them next week as well. So, yeah, let's have a great one, Mike. And as always, guys, be smart out there. October isn't quite as green during the election years as I would like it to be.
Trade smart, trade disciplined, follow the money, have stop losses, and even more importantly, respect them. Focus on good trading habits above all else, and watch how your trading changes. Again, the day-to-day trading habits mean more than anything else. Anyone can get lucky with some random trade and make a bunch of money in the short term, but they'll just give it right back if they don't have a good, strong foundation built, and it all comes down to your trading habits. This is what we focus on so much in the trading floor. So again, check out that first link in the description and the comments down below. But besides that, thank you all so much for watching, and let's have an amazing week in the market.